Hi, welcome to this video date, Tuesday the 6th of February, and it's 10:30 a.m. GMT. What I want to do today is look at taking advantage of bullish or bearish extremes where, investors are just simply blinded to the facts, and you can see price action is confirming a turn. Now, last week we did this, and we did it with basically the stock market. We noted basically the bond market correlating with stocks couldn't last. And on NFP on Friday, wage inflation was bound to have increased. All the data pointed to it, and you can't have stocks and bonds correlate for too long. So, basically, it was a fantastic opportunity. I'm sure many traders out there like us just made thousands of pips each day. Friday, Monday. Now, I think personally, we were a bit lucky with the speed with which the correction came, but it was definitely coming, in our view, pretty quickly. Okay, but you make hay when the sun shines. Now, in terms of our positions, they're cut back a little bit. We'll see what happens today. You can read my notes, obviously, in the member centre. Now, what I want to focus on today, this market I think is really complacent. Crude oil. Traders in crude oil, the facts basically are not supporting prices where they are at all. Okay. Also, price action is on the verge of confirming a major breakdown of maybe $10 a barrel or more. Now, we're already got a small short in, but we really want to load this one up if it comes to fruition. Also want to look at two petrocurrencies we looked at last week. We featured USDCAD and USDNOK. USDCAD, decent profit so far. USDNOK is a really great profit, and I think there's more to come. Okay, now what I want to do is I'm going to start with crude oil, because obviously will impact on the CAD and the NOK. And in terms of crude oil, what I want to do first of all, so I want to start off with the COT net traders positions, because they're telling us how big the break could be. Then we're going to go and draw some levels of entry, stop and target. Before we go to the chart and draw our levels of entry, stop and target, we're just going to look at the COT net traders positions. If you're unfamiliar with them, they're a fantastic tool in terms of not only alerting you to entries, but also allowing you to set targets as well, which you can't do just purely from technicals. Now, what we like to do is look at commercials, smart money hedgers, v large speculators. Okay, we want a big divergence between the two groups, and the smart money commercial hedgers, when you get big divergences, it eventually breaks in their favor. They're always right about major tops and bottoms. Speculators are wrong. The only word of caution I would give to new viewers is that basically the commercials don't lose money because they're just hedgers. So we do. So we've got to use good stop loss protection, but the commercials are telling us here that there's going to be a massive break. And you can see on this chart, I've put it here, this is a record historical net long where the speculators step up here. Okay, so really around 58 they then start to pile in. Okay, and they step up to a really massive long position where we are as of last week, because obviously these positions come out on Friday from the previous Tuesday. I wouldn't be surprised if they've added more. We'll see on the next report. But the commercials have just dropped so short against them. Now, what I will say is this is the biggest record net long position ever held by specs, and the biggest short position ever held by commercials. Now, in the last 30 years or so, when I've been looking at the COT, every time you've had a historical extreme between the two groups, and keep in mind this is the biggest one, you've always had like a $10 break in favour of the commercials. So where the speculators just really pile in here and increase the record net long position, that should be retraced. But I'm looking for a lot more than that. So let's go to the chart and draw some levels of entry stop chart of crude oil. We've already seen how big the speculative position is, and the smart money commercials, no fair value, massively short. Now, if you look at media, which is mostly dominated by the speculators, you get lots of arguments of why crude is going to go higher. I've seen banks say it's going to go to $75 a barrel. They give all these complicated arguments like the back months are going to support the forward months because of the differential. It's all academic nonsense. And yeah, when people start talking academic nonsense and just basically ignore the real facts, you're going to get a break. Said it in the video we did on crude the weekend. Bitcoin. We put up a video saying Bitcoin is a bubble. It'll probably crash. Everyone writes to you talking about blockchain technology. Told me I don't understand it. Well, don't really understand it that much, but you can spot a bubble. And Bitcoin was a bubble. It crashed. Same last week with stocks. At the end of the day, when investors get too bullish or too bearish and you get universal consensus, then it's game over normally. Now, crude, most of the market is still very, very bullish. Let me just talk very quickly. I'm going to do this very quick because I did it the weekend. You can check my video. Let's look at the facts on crude oil. 70% of the movement is speculation. Take speculators out of this chart, it'd look really, really boring, okay? Let's take the demand side. It's supposed to be rising, okay? That's what you read in the media. Since $52 a barrel, there's been no change whatsoever. In fact, demand has actually fallen, okay? Supply side. This is the main media argument. OPEC cuts. They're minor. Non-OPEC members are making up most of the shortfall anyway. So it's just really speculators on a frenzy. Okay. Now, what is interesting is most of the move up from 58 is due to USD weakness. Okay. If you look at one of the big arguments, for example, for crude going up, it's tight inventories. Well, those inventories seem to be being restocked. OPEC have said that would happen. International Energy Association. But the actual speculators are just ignoring it. Now, let's go to the chart. So up we come, and now we've got a choppy sideways period. And crude has fallen a bit, okay? But you look how much the stock market has fallen, okay? And look at how much the dollar has rallied. This isn't a big fall, is it? That, I think, will hold on a close basis. Now, the good thing about this trade is you don't have to preempt anything, okay? You can wait for confirmation. So where would you come in if you wanted to? If she bounces up here, you look for some weakness, probably back through the 20 and sell her, okay? I don't see her going higher, but these are markets. Markets are crazy. You never know. But my view is on a break lower. That candle there, that red one, I'm just drawing my line through. Why have I picked that as being significant? Well, basically, because it's just below a round number, 62. It's 61.88, okay? So you want it clear of the round number because you always get a lot of turbulence around round numbers. So let her come through, give it a little bit of distance from 61.88, and then see if she runs. Also, what you'll notice is the volatility has dropped. You can see it on these bands here, out of Bollinger Bands. If she snaps through the band on high volatility, that's a good indication that we might get a stop hit. So you can take her on strength back through the 20-day or on weakness through that tail and see if she runs, okay? If she runs, I've said, the move up from 58 is mostly dollar weakness, so it should be going there. And as there's been no supply and demand, sorry, I'm dropping black lines on the chart there, apologies. No real, change in the supply and demand situation since 52. Historical breaks in the past have been $10 plus. This one would be 11.5. But with the extreme we've got, yeah, that's easily on the cards. Also, in terms of stop, you can put the stop relatively tight. If she breaks through, I just stick her behind those two candles there. So you've got like about a 2.5 to 1 to first target. If we get to second target, obviously that's something like, if I'm looking right, about 5 to 1. Yeah, from our perspective, crude is just going down. One thing I would say is that this morning we do have stocks a little bit stronger, so they might give crude a bit of a rally. But yeah, this rally is just on borrowed time. And yeah, like all bullish extremes, it will end. And then what you'll have afterwards is the media will justify everything to fit the price. Anyway, right, let's have a look at the two currency trades. And let's go and have a look at USDCAD first. Going to do USDCAD and USDNOK charts, update our video at the weekend. I'm just going to do it from our member center. And I just want to stress something, actually, to anyone trading the markets at the moment. We said in crude oil, obviously that there's that high odds entry lower, okay? We've already got small trade in, so we'll gear that one up. But on a lot of the currency trades, they've gone so well, you want to get some money off the table, okay? Yeah, even if you leave some in, you take some out. We always take 50%, as you can see, when we can get it. And, you know, you've got money in the bank. You think things are going to get better for you. So you can hold one position, and you've got the option to drop your 50% back in if necessary. And that's what we're going to do with USDCAD. So let's go and look at the chart, which hopefully will... Oh, it's the bottom one, isn't it? Okay, so on USDCAD. Now, in the video, we're saying, yeah, 124.25. That was the level to come in through. And, yeah, she breaks up nicely, okay? But it's not a big profit, okay? We're only just 100 pips, okay? So basically we'll take 50%, get 100 pips in, second bit or second portion, you can lock, well, 40. So, you know, you're going to come out with a decent profit if you get stopped out. But if you're bullish like us, we want to stay in. You know, 127, 129, that could be seen. So, what will we do? Well, with our bank profit, we're just going to drop it back in above 125.55, so above here, okay? Now, if she doesn't rally and she comes back through this level, okay, then, you know, we might get stopped out, okay? If we are, that's no big deal. We're going to come out with a profit. We'll just come back straight through the round number again, probably 125.35. I might do it a bit lower. So, yeah, what you could do is, you know, this trade, you know, very bullish of, but, you know, at the end of the day, you want to protect yourself. So we're going for protection first. So I'm just hoping that if crude oil, yeah, runs down, then obviously this trade will move sharply to the upside, but it's not going to move as sharply as the next pair we're going to look at, which is USDNOK, which is a pair which we're extremely bullish of. Now, in terms of USDNOK, where are we? Okay, so we're here. Long at 776.40, okay? Now, we're up at 784.50. So we're off the highs, okay? But 784.50 from 776.40. I mean, this is a fast-moving pair. That is a way better profit, obviously, than the CAD. So what are we going to do? Well, no surprises. We'll take 50% of the profit in, okay? Just re-enter on a break of today's high. So just see if she comes through, okay? On the first portion, we'll lock profit again. Okay, it's going to be not a huge profit, but a decent profit. We got, yeah, the 50 bank out, and we can see if she runs up. If she comes back down, I'll probably reset entry through that 20-day MA. Okay, so again, it's protection first, but yeah, the way crude oil is looking, yeah, we're just looking hopefully for these, yeah, decent profits in these two petrocurrencies to become bigger profits. And yeah, we'll see what happens. We've got a very volatile market at the moment, which is what we want. Yeah, one other point I make is a lot of traders are frightened of volatility. You can't make money without high volatility. You need it. So, yeah, you've got to get used to trading it. And another point I'll make for any new person coming into the Forex markets is you don't need big size to make big profits in the Forex markets. You want small size, sensible stop losses. And yeah, okay, these targets are ambitious, but we've worked them out from obviously like the COT, net traders, etc., correlations. And well, let's see how we go. We might be totally wrong. I'm hoping that our great run continues, but markets are markets. You never know. Protection first, and trade with courage and conviction. Be sort of confident in your view, and it doesn't matter what anyone else says. Just again for beginners, all these people in the media who talk, they don't trade. Okay, they'll justify everything after the event. So just use a little bit of common sense, a little bit of courage, and just believe in yourself. And I think that's a good way to go, basically. So that's the video for today. Thanks for watching as usual. Take care and have a good day.